Tesla just posted its cleanest quarter in years, revenue up 16%, margins up 490 basis points, and free cash flow up 117%. Yet the stock is down 12% this year at $394. What is Wall Street missing? One analyst says Tesla will hit $700 in 5 years, that's 77% upside from here. But there's a catch. Let me show you exactly how, and why it could completely collapse. My name is your name, and I track Tesla daily so you don't have to. Here's what we'll cover in this 10-minute breakdown. First, why Tesla is stuck at $394 despite strong fundamentals. Second, the $700 blueprint, FSD, Cybercab, Optimus explained. Third, the math, how apes can hit $10 by 2030. Fourth, the biggest risks that can kill the thesis. And finally, my final verdict, buy, hold, or wait. Here's the confusion. Tesla delivered 358,023 cars in Q1, revenue hit $22.4 billion, up 16% year-over-year. Gross margin jumped from 16.3% to 21.1%. FSD subscribers hit 1.28 million, up 51%. But the stock dropped 12% this year. Why? Because deliveries missed by 7,600 vehicles. Inventory jumped to 27 days from 22. And China competition is eating market share. Also, Meta just overtook Tesla in market cap. That hurts sentiment. Now here's the bull case. Wall Street's average target is just $424, that's only 7% upside. But some analysts say $700 by 2031. That's 77% upside, about 12% annualized. Here's the math people miss. Today's P/E is 207 times, looks insane. But by 2030, Morgan Stanley projects apes of $10. At $700, that's just 70 times P/E. On a business growing 25% plus, that's actually reasonable. 3 catalysts. First, Cybercab, Tesla Semi, and Megapack 3 all hit volume production this year. Cybercab production started at Gigafactory, Texas. Second, unsupervised FSD is now live in 7 US metros. Austin, Dallas, Houston, Miami, Orlando, Tampa, all have robotaxi rides. Third, Optimus. Tesla is installing lines for 1 million robots per year at Fremont. They decommissioned Model S and X lines to make space. But here's where it gets interesting, because bears say $700 is a fantasy. Their base case is just $140 to $200 by 2031. And bear case? $30 to $45. Their argument, FSD has been overpromised for years. Cybercab delays are likely. Optimus won't generate real revenue in 5 years. And BYD will crush Tesla globally. Now here's what most YouTubers won't tell you, because they don't want to anger Elon fans. The real risk isn't Tesla failing. It's the stock getting reclassified from a tech company to an auto company. Auto multiples are 15 to 20 times P/E. If that happens at $4 apes, Tesla is $60 to $80, not $700. So the $700 case depends entirely on one thing: does FSD and Optimus deliver in 5 years? If yes, $700. If no, massive downside. Let's dig deeper into the FSD story. Tesla now has 1.28 million FSD subscribers, up 51% year-over-year. That's recurring revenue. At $99 per month, that's roughly $127 million in monthly recurring revenue. But the real prize is robotaxi revenue, not subscriptions. If Tesla can deploy a fleet of Cybercabs, the revenue per vehicle could be $30,000 annually. That's the bull case. But here's the counter. Waymo already has 3,500 vehicles in 11 cities. Tesla has roughly 40 in Austin. Waymo gives 500,000 paid rides per week. Tesla doesn't disclose ride volumes. The gap is enormous. Now let's talk about Optimus. The humanoid robot market is projected to be $30 trillion globally. If Tesla captures even 10% of that, the revenue could be astronomical. But here's the problem. Tesla has zero robots doing useful work in factories. Competitors like Figure AI have logged over 1,250 hours on BMW assembly lines. Unitary shipped 5,500 units in 2025. Tesla is behind. The $700 target depends on three things happening perfectly. First, FSD must scale to unsupervised in all 50 states. That requires regulatory approval. Second, Optimus must go from prototype to mass production, with real customers paying real money. Third, Tesla must maintain its gross margin above 20%, while cutting prices to compete with BYD. If any of those fail, the $700 target collapses. So what should you actually do with this information? If you own Tesla stock, the fundamentals are improving. But the stock is down 12% because the market doesn't trust the execution. Watch for FSD adoption data, Cybercab revenue, and Optimus production updates. If you are considering buying, the $700 target is 77% upside, but the bear case is $30. This is high risk, high reward. Position size matters. Don't put more than 5 to 10% of your portfolio in Tesla. If you are skeptical, wait for FSD revenue data. If Tesla starts reporting robotaxi revenue, the stock could re-rate. If they don't, the bear case becomes more likely. Let's quickly recap. First, Tesla fundamentals are strong, but the market doesn't trust execution. Second, the $700 target depends on FSD, Cybercab, and Optimus scaling successfully. Third, APES needs to hit $10 by 2030, that's the key number. Fourth, the bear case risks delays or regulatory failures that collapse the thesis. Fifth, my verdict, watch execution, not Elon's tweets. Here is my question for you. Do you think Tesla will hit $700 by 2031, or is the stock heading for a massive correction? Drop your answer in the comments. I read every single one. If this breakdown helped you, watch this next video. Like and subscribe, I'll see you in the next one.